Will CBDCs replace traditional cryptos? Central Bank Digital Currencies, CBDCs, are here, and they're shaking up the financial world. Governments and central banks are racing to create digital versions of their national currencies. But can these government-controlled innovations upend the decentralized revolution that Bitcoin and Ethereum sparked? Unlike cryptocurrencies, CBDCs are backed by central banks, ensuring stability and trust while offering new efficiencies in monetary policy and payments. Nations like China, the US, and the European Union are exploring these tools. But what's driving this sudden interest? And how will they impact Bitcoin's growing role as digital gold? CBDCs and cryptos share a digital foundation but differ in critical ways. CBDCs are centralized, controlled by central banks, and tied to national currencies. Cryptos like Bitcoin, on the other hand, thrive on decentralization with no single authority in charge. These differences create distinct user experiences. CBDCs aim for currency stability and efficiency, appealing to users craving convenience and regulation. Cryptos emphasize privacy, innovation, and freedom, attracting those who distrust traditional systems. For investors, these conflicting purposes raise a big question. Can these digital heavyweights coexist, or will CBDCs dominate the market? Tech investors are watching CBDCs closely. By digitizing national currencies, central banks gain tools to streamline payments, enforce tax laws, and combat illicit transactions. Their appeal lies in trust. Users know governments back them. But could this reliability push cryptos to the sidelines? The rise of CBDCs might constrain certain cryptocurrency applications like cross-border payments or retail use. However, many argue CBDCs won't replace crypto's decentralized ethos. Instead, they'll occupy different niches, with CBDCs bolstering governmental control while cryptos empower individual freedom. Investors need to evaluate whether these systems compete or complement each other. What about blockchain technology, the backbone of most cryptos? Some CBDCs may integrate elements of blockchain, further validating the tech's transformative potential. However, central banks could also choose more controlled and less decentralized systems, leaving blockchain innovation primarily in the hands of the crypto sector. As digital finance evolves, both CBDCs and cryptos could drive innovation in smart contracts, peer-to-peer payments, and decentralized finance ecosystems. Investors must assess how these technologies influence sectors like banking, e-commerce, and global trade. Insights into this tech convergence could provide a critical edge. For tech investors, the rise of CBDCs and their interplay with cryptocurrencies represents both opportunities and risks. While CBDCs might limit crypto's mass adoption in some areas, they'll also increase mainstream interest in digital assets. The success of one might boost awareness and usage of the other. Balancing a portfolio between stable government-backed CBDCs and the high-growth potential of cryptos could be the optimal strategy. Understanding the shifting regulatory landscape and innovation pipeline is essential for making informed decisions. Positioning now could pay dividends as digital finance redefines global markets. The financial landscape is transforming, with CBDCs and cryptocurrencies leading the charge. As a tech investor, staying informed and adaptable is crucial. Dive deeper into blockchain trends, explore emerging markets for CBDC use, and assess crypto's long-term value. Don't just watch the revolution, be a part of it. Subscribe to our podcast for regular deep dives into tech and finance, and make sure you're ready for the next wave of digital disruption. Now is the time to align your investments with the future of money.